Hello friends, this is a video on how to use Camarilla pivots. Now Camarilla is a very old study which was developed by Nick Scott in 1989, and I have been using this for more than almost 15 years now, and a lot of people have still have questions about how to use them and how to use them objectively and what they actually depict. So that is a very important study, and of course you will find lots of pages on Google. If you just search Camarilla levels, you will get many of them. You will have Camarilla calculators also, but for me that is not enough, because you have to see the price action and what is the context of the price as per those levels. So basically this was developed for an intraday purpose, but over the years I have developed some techniques to how to use it to get an idea on a positional level also. So let's talk about that. Like I said, it was developed by Nick Scott in 89. How are these calculated? These are calculated only on the basis of the previous day's high, low and close. These are the only three pieces of information which it requires: previous day's high, low and close. Now if anyone is interested, this is the formula for calculating each level. Of course it is not, you can get Excel sheets, you can get web pages where you have to just enter high, low, close and you get those levels. They work on daily, weekly, monthly, even yearly. I have seen many times even on a monthly chart, if you see the high, low, close, next month's resistance and supports can be identified. Even before in fact, the first day of the month itself you get the levels. So like I said, it was more of an intraday technique earlier. There are some ways to use it on a positional basis. So we'll talk about that. Now these levels work on anything that has a high, low and a close of the previous day. That's why it works on everything. Any instrument which is traded and has a previous day's high, low, close, it can be Nifty, Bank Nifty, naked options, straddles, triangles, including commodities, crude, silver, gold, everything. Now we have these Camarilla levels in trade point where L3, L4, L5 and H3, H4, H5 are the levels which are marked. They are the intraday supports. Now when you plot these Camarilla levels, you will get only one single line as L3, single line as L4, single line as L5. That line remains constant and it is plotted within the first 5 minutes after the day starts, and it remains constant because it is of the basis of the previous day's high, low and close. So that's why that level does not change. How to use this I will show a bit later for positional. So today is 20th October and I am recording this in the afternoon when the day is not yet over. So this is at 14:20, so 2:20 p.m. Now yesterday, if you see over here, it did not go all the way to the resistance which was H5 here. That was marked at 17,609 and the high of Nifty futures was very close to 17,600, and after that it started coming down. Of course, I'll show you what is the objectivity to be used to trade it, and then today it was a gap down. Now let's talk about only the Camarilla levels for now. So here it's not the level which is shown for the day. After Nifty opened gap down, here something interesting which I have seen over the years is, instead of following only the levels for the day which are shown here, one can also look at levels which were formed yesterday. So they will always be on the chart. So today Nifty did not go all the way down to this support, but stopped at yesterday's Camarilla support right here, which is the L17390, around that, and after that it started going up. Now that is the first sign that it has stopped falling. Number two, how to get the objectivity. After that, once it crosses this level 17,416, then it becomes bullish, because at the same time it is crossing that red line is the VWAP for today. So crossing the VWAP and crossing an important Camarilla level is enough sort of a hint that you can buy Nifty with the day's low as stop loss, and that's a very tight stop loss, not even 30-40 points. After that, what one can do is trail it on the basis of VWAP. Of course, VWAP trading is a different skill altogether. So it's not just the exact level of VWAP. We have to use some cushion below which and above what you have to use the stop loss. But anyone who is used to tracking VWAP will understand how to trail it. And after that, the first target will be this. In fact, as I speak, after 2:20, now I am recording it after 3:30. So the chart was saved at 2:20. It has crossed and gone on to met the higher levels also. So it's very easy to look, but then you need practice to understand what exactly is happening. Now yesterday what had happened, Nifty was in an uptrend for the previous 2-3 days. It opened gap up and did not cross that H5, which is 17,609. The high was near 17,600. But does that mean you can short? No. but then immediately after that it went below the VWAP and went below the H4. So that was just 560 or 570 and the high was 17,600. So that is a good level to short without with a stop loss of only 30 points. The first target in such cases is the next H3, which is 17,620, and after that it came all the way down to the, now the next thing. I have explained the candle levels, I have explained the VWAP. Apart from that, on a this is a 5-minute chart. Apart from that, I always use a 200 EMA plotted on the same chart. So this green line is the 200 EMA. So basically the setup is a 5-minute chart, plot the candle levels, plot the 200 EMA and plot the VWAP. So this is the complete setup. When the 200 EMA is rising, that is an uptrend. It's a, in fact I have tweeted this long back. So an uptrend on a very short term is a rising 200 EMA. So this was in no case a bearish trend, but intraday it was a bearish trade from there all the way to the 200, and there it stopped exactly over here. After that, if it was an intraday trade, you just get out and exit your position. Now today what happened was it gapped down and then again went all the way up. So even if you take it as a positional trade, you still got a, I mean you could tighten your stop loss because this was a very clear stop loss level for trailing. That is one thing. Another thing is, I mean to add more objectivity. When Nifty was near 17,400, I always look at what the call, option call is doing and what the put is doing. So this is the chart of the 17,400 put. Now Nifty futures went below 17,400. At the same time, Nifty 17,400 put of 20th October, today's expiry, opened gap up with the open and high same, and after that started coming down, came immediately below VWAP. So that was clear that Nifty is getting stronger and the put is getting weaker. So this is the second hint. Third hint came from the 17,400 call. Now see again where it has stopped falling in the morning. After that, last proof that Nifty has crossed VWAP, the put is gone below the VWAP and the call is now rising above the candle level as well as above the VWAP. Again the stop loss is very tight. You can buy here. The low was near 47.50, so even buying near 60-65 is just a 20-point stop loss. After that, the first target is always the next candle level, and I always recommend never trade with just one lot, at least 3 or 4 lot, because like I said, there are at least 3 or 4 levels and you need to book partially at every level. So let's say you bought 4 lots, first lot here, second, and as I speak, I think it went to 170 today because after that, like I said, in the last 1 hour market did go up. And again here trailing was on the basis of the VWAP of Nifty futures, not VWAP of the call. Of course, I don't have the chart, but Nifty futures never went below the VWAP today. And then it went all the way to I think 160, or I think Nifty went to 560. So that call went to 160, 170. So this is a very easy technique. It's just a question of getting used to it. And I don't recommend to start trading on it immediately. Observe it for 5-6 days. There is no holy grail. You need to understand the system, how it works. Let us see a couple of more examples. This is Bharati. The Bharati futures, if you see the 200 EMA on 5 minutes since last 3 days was in an uptrend because the 200 EMA is rising, the green line. After that, another thing which I always see is how is the positioning of the candle band. Now when I mean band, is the lowest support level and the highest resistance. So this band and this band. So this band is higher than this band, the difference between the high and low. So that is an uptrend. It is as simple as that. And the rising 200 EMA. So whenever in such a case the instrument comes near the 200 EMA, like it came here yesterday, that is a very good level to go long. So from there, of course, it gave a dip in the morning because the whole market opened. But see where again, even if you had missed the entry yesterday here, see where it has made a low today at L4. And after that, again above VWAP, and Bharati went all the way to 790, I think. Another proof is the 780 put. When Bharati yesterday was sideways, so this put was doing nothing. But today, the moment Bharati started going up after open, the put started going down below VWAP and it went all the way down. The 780 call exactly similar to the futures, and I always tend to look at the money call or put. There is no point in looking at out of money if it is intraday. So here again, see where it has taken support above VWAP and it went all the way to more than 10. Another example is Reliance. This is a sort of a positional trade where 3 days back Reliance was slightly choppy over here. It went down all the way to 23.55 or so. In fact, even on the previous day, the Camry level was 2355. It opened slightly, gapped down, took support at a L4, went above VWAP. After that, the uptrend started. Now, this is a classic case where it has closed well above the 200 EMA. And of course, you need some kind of market understanding to this. Now, everyone should be aware that Reliance is coming with its results, I think 21st or something. So, before that, generally Reliance has a sort of a bull trend, at least for the 3-4 days. In fact, we had a good backtest on Opstra also. If you buy Reliance 50 Delta call 1 week before the results, what happens? That is a very interesting study. So, after that, it went all the way from here to here and then opened gap up, and it kept on going to almost 25, 40 or something like that. Now, the next hint on this is what did the call do? Call did the same what the futures did. It opened at a Camry level above VWAP. It was around 50, and after that it went all the way to 160 in 3 days, from 50 to 160. Of course, you won't get a trade like this every time, but this is what is possible if you look at it closely. Now, to take the final proof from the put, when the put opened here, now this is what I mean by positional trade. Whenever an instrument is in uptrend, if it opens straight at the Camry level resistance, which is typically H3 or H4, that is a sign that it is topping out. Now, this is a observation which I have made over the years, and even you can do it. And once it tops out, after that it's a very good fall which it gets. So, this put was in an uptrend from here. It went, I think Reliance gapped down. That was the day this put opened right at the Camry level. After that, it started coming down. So, this is a very good case study for how to use Camry levels on a positional basis. Typically, let me go back. Now, this is a 2400 call. Same way it went up, and even if someone wants to trade only intraday. Now, yesterday it did go up, but today again, yesterday it again opened at a Camry level and went up all the way to the next resistance. So, this is what I was talking about using Camry level for positional trades. Any stock in an uptrend generally finds support near L3 or L4. In some cases, it might even gap down to L3 or L4 and then starts rising. This is in an uptrend. Whenever a stock is topping out, like I showed in the Reliance put, it generally gaps up to H3 or H4 and declines fast and closes below L3 and L4. Exactly opposite, any stock in a downtrend generally finds resistance near H3 or H4. In some cases, it can gap, this is H3 or L4, it gaps up to H3 or L4 and then declines. Whenever a stock is bottoming out, if it's in a downtrend for let's say 3, 4, 5, 6 days, it generally gaps down to L3 or L4, rises fast and closes above H3 or H4. Now, how to identify whether this is really happening? That is where you can look at the call and put charts, where since it is gapping down, the put will be at a resistance like I showed in the case of Reliance, or the call will be at the support, or maybe all three, stock at support, put at resistance and call at support. So, that is a very classic case of identifying a bottoming out process. So, this was a quick introduction to whoever doesn't know anything about Camry levels, or a revision for whoever has been following Camry levels. I have been using them for more than 10-15 years, like I said. We have this feature in TradePoint, and hope you enjoyed it and you had something more to learn. And of course, if you have any questions, you can write to me at ap@definedge.com or any tweet to me or a DM, that is also fine. If you like these videos, do subscribe to our channel, like the videos and even share it with your friends. I'm sure you will not make any mistake in following these, because it's not just about Camry levels, it is something how to use it objectively as well. Thank you.